Welcome everybody. On a regular basis, I get asked by small business owners, how do I know if my idea is a viable one? How do I know if I'm launching a new product or a new service that it's worth pursuing? And I believe in 2018, this is even more important because a lot of us have incurred a lot of increases in expenses. For example, the minimum wage has gone up. So our break even has changed. So even for existing business, it's really key that we now calculate exactly what our break even is. But just before I get going, let me just tell you a little bit about what we do at BizLaunch. We teach business owners and entrepreneurs the steps they need to take to build a profitable business. And we do this through our webinars, through our seminars, and our training programs. When calculating your break even, you've got to start off by knowing exactly what your monthly fixed expenses are. If you're calculating your break even for the year, you need to know exactly what your fixed expenses are for a full year. Again, you go through these numbers, your rent, your telephone, your insurance, your salaries, your wages, all of those things. I also encourage you to put a minimum salary in for yourself. So I believe that we break even when we pay ourselves a salary. When it comes to a service business, you need to know exactly what your hourly rate is. So how much do you charge for every hour that you sell? Or how much do you expect to charge? Do your research and understand if you're a brand new business. When it comes to retail, you need to know your gross profit percentage. If you're an existing business, you can find this on your income statement from the previous year. Just speak to your accountant. If you're a brand new business, you need to know what the industry average is for your industry. Now let's go through the exercise you need to do to check your break even. And remember, this works both for existing businesses and brand new businesses. For us that are existing businesses, we need to know what our monthly break even is so that we can achieve or at least build a profitable business. Let me go through an example of what you do. The first thing, and this would be different for every single one of us, is we'd go through our monthly operating expenses. Our accounting fees, our advertising, our bank charges, a salary for ourselves, our monthly hydro, our internet, every single expense. Maybe speak to your accountant to calculate your average depreciation on a monthly basis. So in this example, this business has got $7,095 that it needs to pay every single month to break even. And remember, in this case, the break even includes a salary for the owner. And let's say that my hourly rate is $125. That means that I need to have billable hours every month of at least 57 hours. So before I even start the month, I need to know that I need to sell 57 hours. I think this is really useful knowing this as a business owner. If you're an existing business owner, this really helps. You can maybe decide to launch a new service. Let's say you're going to charge $150 an hour. It'll tell you how many hours you need to sell to make this a viable idea. Really simple, but very effective. Let's say, for example, you were selling training programs like me. So you were selling training programs like me, and let's say you charge $495 per training program. This would help you calculate exactly how many registrants you need to have every month to make this a viable idea. Understand the value of this. If you're an existing business, it'll tell you exactly how many billable hours you need to sell every month. If you're launching a brand new service, it would tell you exactly how many billable hours you need to charge every month, or if you're charging a service or whatever it is. And it really helps to know this. It really helps to test the viability of a new product or a service. Let's say you were a retail business. If you're a retail business, you'd go through exactly the same exercise. And I put a bunch of numbers in here to make it really easier for us. You'd go through it, put your salaries, put a salary for yourself, put your employee benefits, your depreciation. You put every single expense. And remember, for each one of us would be different. And let's say I'm in a fashion business and my average gross profit margin is 65%. This will give me what revenue I need to generate to make this a viable business. And let's say I know from experience that the average customer spends $150 when they come into our store. That means I need to generate $35,976 of revenue a month. At $150 per customer, that's $240 customers a month to make this a viable idea. This is really useful information. So whether you're starting a new business, whether you're an existing business, this is really going to help you to know exactly what your break-even point is, because this changes as your expenses change on a regular basis in your business. This is what I encourage you to do, is to go through this example, calculate your break-even. And very, very importantly, to keep learning. You want to learn 10 webinars, 10 seminars, and my wish for you, every single one of you, is that you build a very successful business that you love working in every